Welcome everybody for this new episode of the Corporate Treasury 101 podcast. Today we invited Koen De Smet. Koen is a director in a consulting firm and specialized in treasury transformation projects. In the episode of today, Koen walks us through what is the role of systems in treasury and the main function of the TMS, the Treasury Management System. We today really focus on understanding what are systems used for, what are the tasks that can be done through them, why would you even use systems, what type of company, or as of when a company needs systems in treasury. Of course, expect also to learn what is a TMS and what are its main functions. You may hear a small echo in the recording that we could not fix in the post-productions, and we would like to apologize for that. The episode is very insightful though, so we hope you can enjoy it regardless. Last but not least, before getting into the episode, some small flash informations. We published an ebook. If you are dreaming of finding a book explaining the ABCs of corporate treasury, well, do not search anymore. We got you covered. Head to the link in the description to download it, and the best part, it is completely free. Also, if you like the podcast, or if you want to support us, or if you do not want to miss any of the episodes in the future, or all of the above, well, subscribe to the podcast. Oh, and you can also give us a good rating in the meantime. That makes Usam and I very, very happy. It also helps the podcast to be found more easily by other treasury aficionados, and yeah, it's very good for the referencement, so please do not hesitate. With all that being said, please welcome Koen De Smet.
Koen, welcome to the podcast. Super happy to have you here.
Thank you, Guillaume. Thank you. Also happy to be here.
It's gonna be very exciting. So maybe before we get into the topic, can you quickly introduce yourself for the people who might not know you?
Yeah, absolutely. So I'm Koen De Smet. I'm part of a treasury advisory team of a Big Four consulting firm. I'm a director and I'm specialized, as I mentioned, in treasury advisory, mainly for corporate treasuries.
Okay.
And within that, I'm actually more helping corporates to transform their treasury organizations with a specialization in treasury technology.
Awesome, which is spot on because we talked about a lot of topics on this podcast already, but we never talked about systems, and I think you're the perfect person for that. Can you, to begin with, what's a system actually? When we talk, of course, of the financial world and in a corporation, what's a system?
Well, a system is basically first of all, a repository of capturing transactions, and transactions could mean different. The classical AP and AR invoices, basically, going until payroll records. But in treasury, we of course talk about other type of transactions that are captured in systems.
Okay, so AP and AR, just like, let's say people do not have any knowledge of what those could be. What are those terms exactly?
Well, accounts payables, accounts receivables. Everybody must have received an invoice in his or her life.
Yeah.
That is typically captured in an ERP. I use that as a kind of a example of why systems are used in, let's say, corporate worlds, and for treasury specifically. A system is then used to capture treasury-related transactions and data points as a first element, and secondly, to enable the digitalization of workflows within a system.
Okay, so digitalization is a super interesting topic. Why, to begin with, why is it important to capture those transactions? What's beneath that?
Well, as an example, some of the corporate treasuries that we work with have, let's say, hundreds of bank accounts, first of all.
Okay.
So imagine that you are, as an individual person, having, one or two bank accounts at maybe one maximum two banks. You can go to two electronic banking systems and you can capture your account information there. If you're a corporate treasury, you basically have plus 100, plus 1,000 some of the corporates' bank accounts. So ideally, you capture that all in one system and you don't have to go to, 20 different platforms to capture your bank account, bank statement information as a first element.
Okay. And therefore, you can capture correctly what's happening on those bank accounts and help you with driving your treasury.
Exactly. A second element, for example, is a function of corporate treasury, which I'm sure you have covered already, is financial risk management, right?
Yes, it's okay. This one we have. Whew.
So
yeah, okay. And so the system, but we're going to come to financial risk management. The second point you mentioned was digitization. Well, obviously, that speaks by itself, right? A lot of corporations try to digitize their processes and so on. Why do you want to do so in finance and more precisely in treasury?
Why you need digitization in treasury?
Yes.
Well, just because of the vast majority of transactions that the treasury team is dealing with, which is typically quite large amounts of data and transactions to be dealt with, which is almost impossible or is very error prone and high risk if you do that offline, i.e. in an Excel. Secondly, a treasury function is typically a lean and mean function, which is not staff. Therefore, being able to kind of automate some of these elements in the system is essential to be able to truly act as a value add function.
Interesting. Okay, so you'd rather have a system doing a lot of repetitive operations, I guess, rather than having somebody or numerous people doing it by themselves.
Exactly, yes. Yeah. So to a certain extent, automate what you can automate to avoid somebody manually having to do a repetitive action that essentially can be automated or semi-automated in a workflow or a tool.
Okay. And I imagine the bigger the company, the bigger the amount of bank accounts, as you mentioned earlier, so the more relevant becomes the systems in treasury.
Exactly, yeah. There is, that's what you see also with the, let's say, companies that are fast growing, that they've outgrown almost their treasury function, and that their treasury function is still operating as a, let's say, a smaller or medium-sized company. That suddenly then requires to catch up to be able to catch up with the company's complexity as such as well.
Okay. Yeah, makes a lot of sense. And you mentioned earlier the financial risk as well. So I know I've read on LinkedIn, sometimes people do not call it a treasury management system, but a treasury risk management system. What's the dimension of the financial risk here in the system? How does it help? So it will capture the transactions, right? When you do your hedges, for instance, but what else? What's in there?
Yeah, so it starts, of course, with exposure management, right? So ultimately, if you want to hedge, you need to understand what your exposures are, and typically, exposures are FX exposures, so foreign exchange that are arising from the balance sheet or off the balance sheet. Secondly, you have if you have floating rate debt, you basically have interest rate risk.
Yes.
That requires to be hedged, and some companies, depends on the business, of course, also have commodity risk. And those are your exposures as a number one. Secondly, and then when you have exposures and you have a hedging strategy that defines that you want to protect yourself against market volatility, you would hedge those, and capturing those hedges and operating those trades would happen in a treasury management system.
Awesome. So among all the terms you just mentioned, we covered most of them in the podcast. I just like to come back on one. You said exposure on and off balance sheets. Can you quickly walk us through that? What does that mean?
Yeah, so basically on balance sheet, coming back to my very earlier point around AP and AR.
Yes.
So that means as soon as you book an invoice, it's on your balance sheet, right? That means that it is an exposure that is out there that can be hedged. Off balance sheet means a forecast of an expected, let's say, future sale or receipt.
Okay.
We see, for example, companies in project-related businesses doing a lot of cash flow hedging, which is typically off balance sheet.
Okay. So typically what you're sure is going to happen will be on balance sheet. I mean, in an ideal world where everything happens as it should, on balance sheet would mean it's an invoice that has been issued, so it will happen. And off balance sheet will be more, it's something that we predict, foresee, but it's not, I mean, the amount may vary. That's,
exactly. There's more uncertainty around that. So typically you would see companies not 100% hedging their exposure, but rather taking a bit more a prudent approach there.
Okay. Or gamble them out of it and hope for the better on the market. That's also an option, I guess. Okay.
Yeah.
Anything else in the role of systems in treasury? Because that was going to be one of my questions, but I feel we covered it with the reconciliation, recording of the transaction, the financial risk aspect of it. Anything else?
Yeah, it's of
Finance
course what I briefly touched upon as well, your funding and investments, right? So
Mhm.
some companies have a shortage in cash, some have excess in cash. So
Absolutely.
that means you need to be able to track your loans, your debt issuance, your investments that you put at banks, your money market funds.
Okay.
That is all captured in treasury management systems. Lastly, there's also cash management. So basically, if you have those 1,000 bank accounts, which are then typically part of some sort of a pooling structure that needs to be tracked accordingly in a treasury management system.
Yeah.
And then you, of course, have your treasury accounting, right? So once you captured all those transactions, you need to account for them.
Yes.
And that's then also operated by the treasury management system that in most cases serves as a sub-ledger to the general ledger to basically create the accounting entries and typically interface them to an ERP back again as well.
Okay, so Koen, those are a lot of fancy words. I love it. So that's really clear. Just to summarize this, I would say that the system is just used to record and track everything so you can drive your financial decisions in the most efficient way. That's good. Okay. And regarding the treasury accounting, that's for some reasons, because I don't really like it, something we didn't cover in the podcast yet. But so what is happening in here? So sub-ledger, general ledger, what do you mean by that?
Yeah. Let me try to explain that. So
no pressure.
If you have a let's say a forward, an FX forward, right? That means I'm buying and selling a currency against another currency at a future date, right?
Yes.
That means that trade will, of course, requires to be tracked in your accounting. So, for example, at month end, you would do typically a mark to market, right, to understand what's the value of my forward right now today.
So you compare it to the rate that are currently on the market against the one you contracted it at.
Exactly. Without going into the details as to how to do that.
Okay.
That means that let's say unrealized profit and loss that trade will bear has to be booked, and that gets booked at month end, typically by a treasury management system. And that's why I'm saying a sub-ledger, because it only captures the treasury related accounting entries within its system, and it will then interface those to the general ledger where everything else is captured, your balance sheet, your P&L, and so forth. That is then tracked there accordingly.
Super clear. Thanks a lot. Sorry, that was a bit of an unplanned question, but super clear. And the general ledger will be at the ERP level, I imagine, or something like that.
Yes, that is typically the case.
Super clear. Does every company have a treasury-related system, or as of when do we have a treasury system?
Well, there's no golden rule as to when you should get a treasury management system in terms of, for example, total turnover of a company, right? Let's say as of 1 billion, you should get a system. There's no such rule as that.
Okay.
I think you need to look at your complexity in which you operate.
Yeah.
And then that will define basically what are my broader treasury requirements or needs. And then that will then define whether you need a system or not, right? And it will also depend again on the volume of transactions and so forth.
Okay.
To use an example, if you have a company that purely operates within, let's say, a single country, just as an example, taking Belgium, and purely has transactions within Belgium, has no foreign exchange risk, has only a handful of bank accounts, a treasury management system might be overkill. However, if the company starts to grow and starts to export and import from various countries and therefore has foreign exchange risk, has bank accounts all over the world, then it becomes suddenly unmanageable to do that outside of a system. And that would be then, when the company would start requiring a system to do things properly, efficiently, and without reducing risk.
Okay. So it's not that much about the size of the company, but more the complexity of its financial transaction operations. However, we mentioned as of when you start to have a lot of transactions and a lot of bank accounts, I guess the bigger the company, the higher the amount of those, right? So it can also be linked to that. But it's more, first criteria is more complexity of the treasury landscape than the actual size. Okay. Very interesting. And is there a moment where it becomes critical? So you are in multiple countries, you have FX hedges or FX exposure, at least, that you might want to hedge. You have bank accounts throughout the world, different currencies, loans, as you mentioned, with variable interest rates and so on. There it becomes critical to have a treasury management system.
Yeah, I mean, that's every company, of course, to decide that amongst themselves. I think if indeed if your company starts to, outgrow your supporting functions, then your supporting functions probably need to grow with you.
Mm-hmm.
And that is, again, there's no kind of left or right answer here. It's more the companies to be evaluated themselves. You can basically, increase your team with 10 FTEs and still do it offline.
Yeah.
But that doesn't mean that none of those 10 FTEs will ever make a mistake. While they can still make a mistake in the treasury management system, it will be much more controlled, much more centralized, and so forth. So that, I think, is each company to define it themselves. But typically, the answer is pretty obvious.
Okay, that makes a lot of sense. So not depending on the risk appetite here, but how far they want to automate the processes and how digital they want their landscape to be.
Yeah.
Very clear. Just a technical question on the treasury management system. Systems related to treasury. How do they work exactly? Is it a license? Most of the people know about SAP, right, and Oracle. But when it comes to systems in treasury, are we talking about software as a service? Are we talking about licenses now? How does it work exactly? What's the process?
So similar to other systems, I think what we are seeing in the market is a very big shift towards SaaS. And let me try to spell it in full. So that's software as a service. And SaaS applications is more and more, let's say, the way to go. So in fact, what you can get is a treasury management system. You could either, let's say, install what they call on-premise, which is a bit what we saw 10, 15 years ago, where most corporates were basically installing that service on their own server sites, right?
Okay.
Similar to how ERPs were typically done. Now we are seeing a shift towards, and those are, let's say, option 2 and 3, towards private cloud. That means, that is often a term that is used interchangeably with SaaS, but that's actually not correct. So private cloud is where a system vendor will host the application on their server sites, but you basically have your own private application, let's say, at that vendor, your own private database. Whereas with SaaS, you're basically are accessing a software and a solution that is also accessed by other corporates. Everybody has, of course, his or her part or his part of the database, but it's all managed by the vendor. And the big difference is system upgrades. In a SaaS application, an upgrade is done on the fly, basically over the weekend. In all the two other options I mentioned, on-premise or private cloud, that is done as in, let's say, a mini project that requires specific handling because of the nature of that deployment or installation.
So you're now even anticipating my questions. But so why would anybody go for the private cloud solution then? If you need every time to mobilize some resources in order to do this mini project rather than having the software company just updating it over the weekend, why would you choose a private cloud nonetheless?
There is some vendors and applications that basically are not yet offered as a SaaS solution. That's number one. Basically, you don't have the choice. The most important difference is the configuration and customization ability of SaaS applications. There's a certain limit to that because you're all using, the same software, the same functions, and not everybody can kind of get all their wishes in the system and customize certain things or workflows, because they're also used by other corporations, let's say. In a private cloud and an on-premise solution, you have much more flexibility there, where you can basically get your own custom solutions in the system.
Awesome. So it's about having a standard product that everybody use the same version of, or having it customized for. Is it something corporations seek a lot, like having something very tailored for the treasury function because of the complexity of it, or what's the state of the market on that?
Again, there's a big evolution been done there. That if you 15 years talk to a corporation, they will typically come with their requirements and kind of force fit the system of the vendor to meet those requirements and specific needs, and therefore you would typically have more customizations, because there is a certain process that needs to be installed in a system, and it's not standard, and it requires coding changes of the software.
Okay.
What we are seeing today is that a lot of corporations are very hesitant to get customizations in the solutions, because that means if you do an upgrade later on, it becomes more there's more workload, more cumbersome. Exactly, that was the word I was looking for. So that I think is a key thing, and that's what we are seeing, that the more and more standard solutions are basically adopted by corporations that are offered by the vendor, and processes are rather changed than trying to change systems. A second element is that, and that's mainly the bigger corporations, then if they have a specific need or requirement, they will try to sit together, let's say strategically with the vendor, to get this into the core product. So basically get the requirement in the core product, and then it's part of the offering for everybody, which is, I think, the better way to go for it.
Okay. So if you have negotiation strength, power, however we call it, enough as a big, massive corporation, you can even influence how the software is done.
That's one, of course, your weight, but secondly, it's also the relevance of a certain requirement for other corporations. If the vendor sees value in this, they will for sure look into that to add to their core product.
Which would make sense. Okay. And so I'm jumping into the technicalities a bit, but it's super interesting. Would the solution not be to add some options into the standard products, and you just unlock those parts of the SaaS if you pay more, or is that not something doable? So big corporations might actually just go to their vendor and ask for an additional option, module configuration whatsoever that will be implemented into a standard offering of this vendor. If you have a SaaS, so something not a private cloud, could the company say, okay, everything is on SaaS, but if you want some customization, we have them accessible in an optional module, for instance, and you can just decide to activate them or not. Is that something that is possible, or am I completely out of?
Not to my knowledge, but it's actually a good question. So you could then, look into, I'm not going to call it workaround solutions, but add-ons to your treasury management system, right? So basically, for example, have an RPA tool that kind of pulls data in and out your system to achieve the same, as an example, so robotics process automation. But I think more importantly is there's user groups, right, of vendors that are meeting annually, biannually. Requirements are being shared. I think sitting at the table together with your vendor on a strategic manner, to kind of talk through your needs, think through together, and ultimately get things on the roadmap to develop, to get developed, is, I think, the better way to go for this. But of course, speed of execution is sometimes important. Therefore, workarounds, as I mentioned in the beginning of my answer, are sometimes opted for in the beginning.
Okay, super clear. That's good. The vendors are listening to their actual user and implement changes on the go. Very clear.